guest. He is Klaus Regling, the managing director at the ESM. Mr. Regling, of course, today you're tapping markets for the first time. This is the initial sale of next generation EU bonds. That's the key to the recovery fund in Europe. And I wonder, what kind of appetite are you predicting for this product?
I'm sure it will be a big success. The European Commission is starting this program that could add up to 800 billion over the next 5 years, but they already got almost 100 billion from the markets to finance the SURE program last year and early this year, and all that was very successful. So I'm sure this first big issue, 10 billion or more today, will also be a success. The appetite of international investors around the world is there. We had an investor video conference, European Commission, European Investment Bank, and myself from the European Stability Mechanism earlier this week, and we could see that international investors are very happy with these bonds coming out of Europe.
Right, and when you say international investors are happy with this debt coming out of Europe, what is it that they want? What is it that they're looking for in this product? Is it a safe asset? Is it perhaps a yield that's not like the German bond that may actually give you something? What is it that they appeal to?
Well, first, international investors want to diversify their assets like every investor. So they don't want to put everything into US dollar or other currency. Also, they want a big chunk in euro because confidence in the euro is very strong at the moment. When I compared with what I saw 10 years ago, it's just very, very different. So people are happy with how Europe has reacted to the crisis, how the euro area is developing. The forecasts are good. The response to the pandemic was effective and appropriate. So confidence in Europe is there. And indeed, I would call it a safe asset. Bonds issued by the European Commission, like the bonds that are issued by the European Stability Mechanism or the EIB, and investors can pick up about 30 basis points higher yield than German bonds. So all that makes it very attractive.
Right, and I'm sure that's a point that gets taken into consideration. And Mr. Regling, just to wrap on the issuance, I wonder, you have to issue a lot of bonds this year. That's 80 billion euros, 150 on an annual basis from now on until 2026. Do you worry perhaps that the market is becoming a little bit too saturated? I mean, because on top of this, you also have the national sovereign bonds that also need to tap markets. Can you find the right window for each product?
Yeah, and of course, I'm not doing that. This is the European Commission. What's happening today? We have our own issuance program. I don't expect any problem in today or in the near future. We all talk to each other. We coordinate with the national debt offices. It is correct that debt issued by European sovereigns and institutions is much, much higher than last year or 2 years ago. This is true also for all countries around the world. In response to COVID-19, all countries have had to increase spending and fiscal deficits and therefore have to issue more debt. But at the moment, also as a result of the monetary policy of the ECB, the Fed, and other central banks around the world, this is not a problem.
And Mr. Regling, of course, we've talked about the European economy in the past too. Now we've seen vaccinations really pick up in the past few months. How bullish are you in this recovery?
When I look at the forecasts coming out from international institutions like the OECD or the European Commission, IMF, but also what I see in the markets, forecasts from market analysts, they all agree basically that from the second quarter this year, so right now, we see a very strong recovery. First quarter was still weak, in some countries negative because of the lockdown and response to the third wave. But from now on, the expectation is that it is really strong. And the ECB came out with a forecast last week. They expect 4.6% growth for the euro area this year, 4.7% next year. And that would imply that by the first quarter of next year, the euro area GDP would be back to the December 2019 level, just before COVID-19 hit all of us. Of course, there are risks, but the risks are balanced. There are upside risks. It could be stronger depending on accumulated savings spent even faster. Downside risks coming from new variants. And your program a few minutes ago talked about the United Kingdom postponing the lifting of the lockdown by another month. And there's unfortunately a reason for that. So these are risks which exist, but the baseline scenario is very strong in all the forecasts that I see.
And just as a final question, how much do you worry about inflation? Because, I mean, today, of course, it's this new auction that's hitting the market. We're talking about Next Generation EU. But I wonder, if you're an investor, should you worry about inflation, especially if you're in the fixed income space?
Sure, there's a lot of talk about that. And it's good to remember that central banks around the world, including in Europe, have been working very hard to bring inflation up. And I think that we will see that in the next 2 years or so. In the US, maybe one should need to worry a little bit more than in Europe, because there the stimulus is very much focused on the demand side, very much this year, while in Europe, our economic support programs like Next Generation EU are designed very differently. Money will be spent over the next 4 years, and the money will be used not only to stimulate demand, but also to strengthen the supply side of the economy. And therefore, I think inflation worries are much less in Europe than they are in the US, where we know that some prominent economists are actually quite worried, but that's not the situation in Europe.
Right, Mr. Regling, thank you so much for joining us on Bloomberg. And again, congratulations on that bond sale that we're expecting will be executed today. Thanks for joining us. Anna?
Maria, thanks very much. Our Brussels correspondent there. Maria today with Klaus Regling, Managing Director of the European Stability Mechanism, as we see that massive bond raising taking place in Europe, just beginning at least. Now, coming up, as England delays, we just heard Klaus underline this point, as England delays its reopening, where next for the struggling hospitality sector in the UK? We speak to the London Mayor's nighttime czar, Amy LeMay. That interview next. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the European Market Open. 43 minutes into our European trading session, and we see gains across European equity markets up by 0.7% on the Xetra DAX. The chemical sector doing particularly well today. Now, England's Freedom Day, as it has been called, seems to have been delayed. As expected, Boris Johnson yesterday announced he was pushing back, lifting virus curves by a month. That's amid concerns over a rapid rise in COVID cases as the highly contagious Delta variant spreads. But the Prime Minister reassured weary Britons that an end is in sight.
On the evidence that I can see right now, I'm confident that we will not need more than 4 weeks and we won't need to go beyond July the 19th. It's unmistakably clear the vaccines are working, and the sheer scale of the vaccine rollout has made our position incomparably better than in previous waves.
We're joined now by the London Assembly's Night Czar, Amy LeMay. Amy, very good to speak to you and to think about what impact this is going to have on the nighttime economy of London. I mean, obviously, this is bad news for the sector that you think about, the sector that you're very fond of and that you represent. But 4 extra weeks, this sector has been pretty much closed for 15 months. Is this really going to be make or break, or are we already partly broken for some parts of this sector?
Hi, Anna. It's great to be with you. The delay to restrictions being eased is a real blow to many businesses and London's nighttime economy. So many of our hospitality, culture, nightlife industries are struggling to survive with reduced capacities, while our world-renowned nightclubs have been completely closed for more than 15 months, as you say. And they're all desperate for restrictions to be lifted as soon as possible to help get businesses back on track. And they have been planning for months to be ready for next week. We are in danger, let me be clear, we are in danger of losing countless businesses, jobs, and livelihoods. So it's absolutely essential that the government provides urgent and comprehensive financial support to help businesses through this further period of uncertainty. And this means extending the full business rates holiday. It means extending the evictions moratorium that is meant to start at the end of this month, extending the existing furlough scheme until all restrictions are lifted, and an extension of the cultural recovery grant. So every day that social distancing rules remain in place, it pushes more businesses in sectors like culture, hospitality, and nightlife to the brink of collapse. And any reduction in financial support at the end of June will have dire consequences for jobs and for livelihoods.
And Amy, are you hearing from the government that there is any movement on that? I mean, the furlough scheme is still in place until September, but of course there's a taper that does start to be introduced through July. Now that things have changed, now that the date of full reopening has been pushed back, are you hearing that there will be a continuation of those fuller levels of support for the sector, for the economy as a whole?
We saw what the Prime Minister announced last night, and that is all the information we have. We are continuing to press government for this, but quite frankly, the industry and leaders around the UK were shocked that the Prime Minister did not announce any extension of financial support for the industry. The sector needs to be supported so that they'll be able to open their doors again when it is safe to do so.
Of course, this date, well, the previous date, June 21st, Amy, was always cast as a not before date. And so there was always the opportunity, or the possibility rather, that this could be delayed. Now we've seen it be delayed. Prime Minister Johnson, though, painted July 19th in a very different light, though, last night, suggesting that this would be a much firmer date. How much do you sense that the sector will be planning ahead more firmly towards July 19th?
Well, the good thing about the hospitality and nighttime and culture sectors is that they're very resilient and they're innovative. So they will make the adjustments necessary. But let's be clear, these businesses need the support. They need the financial support in order to be there, to be at the very heart of our social and economic recovery. I mean, the latest data shows, we've started to see a small increase in the number of COVID patients here in London hospitals. They're still very low compared to earlier in the year, but it's clear the data is going in the wrong direction. And we all want to see restrictions eased as soon as possible to allow more businesses to open again. So it's important that the government ensures that London has the vaccine supply and the resources needed to vaccinate everyone who needs it. But also, we need the government to realize that our nighttime businesses are central to our social and economic recovery to the pandemic. So that is why the government needs to provide that urgent, comprehensive financial support to help them through this further period of uncertainty.
Amy, I read that some in the nighttime economy are thinking of taking legal action. Is that something you're aware of? Is that likely to deliver?
I am aware of it, and we're watching to see what happens. But I think regardless, the nighttime businesses are really great at innovating, and they're also very good at following strict rules. I mean, they do this as par for course. Even before COVID, they were adhering to strict rules around licensing and health and safety. So given half a chance to survive, they will be at the heart of our recovery. We just need the government to step up. Yet again, they said that they would do anything necessary. We need them to help us over the line. If it's going to be another 4 weeks, we can accept that, but we need that support.
Whilst I have you, Amy, I wanted to ask you about something else. You launched the Mayor's LGBTQ plus venues charter, and we are in Pride Month, even though many of the venues you represent are not able to be open. Pubs, of course, are open. The Mayor is committed, we understand, to provide an annual audit. I wonder what you're discovering about the provision of these types of venues in London.
Yes, well, it's a very interesting question because we established the LGBTQ plus venues charter and the LGBTQ plus venues forum to help these venues become more resilient and share good practice. And we saw between 2006 and 2016 a 62% loss of our LGBTQ plus spaces in London. So the Mayor and I have been committed to turning that around. We've had no net loss. We have contributed a lot of support to these venues. We know they're at the very heart of London. And if we lose these venues, we lose something very special that London has. They're a beacon of hope for so many communities, so many people. And so we need to carry on with that support. And we're just doing everything we can to make sure that those venues are there to be part of our recovery on the other side.
Amy, thanks very much for joining us. Amy LeMay, Night Czar for the London Assembly. Thank you very much for joining us. Here on the European Market Open, 8:51 here in London. Coming up, European stocks continue to shine. That's as investors look ahead to this week's Federal Reserve meeting. We'll get back to the macro themes we're dealing with this week with the Market Live team's Laura Cooper, who's with us next. This is Bloomberg.
curtain will rise again.
Broadway's returning
50.
June.
Have you bought tickets?
It's busted out.
You've got more time here. Have you got-
Commodities are up.
Keep going.
To the
Oh,
moon.
no.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how
Grammarly
sensitive the
ensures
markets are to any commentary.
সম্মানিত সুধী আসসালামু আলাইকুম আমি শাহাদাত হোসেন শামীম আইনের গল্প
That is now being reversed.
Welcome back to the European Market Open. 8:54 in London, so 54 minutes into a strong European trading day for European equity markets, up by 0.7% on the Xetra DAX. European stocks continuing to shine then this morning. That's as investors look ahead to this week's Federal Reserve meeting. Laura Cooper, Bloomberg's Markets Live macro strategist, is with us. And Laura, what do you sense is really driving these gains? We still sit here with very low interest rates, with the US 10-year yield still down at 1.47%. For as long as that is the case, does that give a sort of green light for stocks to carry on?
Well, and I certainly do think that's the case. You know, there's expectations that we are going to see a dovish Fed tomorrow, and that's really giving the green light to equities, extending their gains. And I think in particular in Europe, the narratives remain unchanged. We are seeing that conviction of the European growth recovery. We are seeing inflation expectations are expecting to kind of climb even higher. That tends to correlate quite well with a number of sectors across Europe. And we do see still deep discounts across a number of low cyclically oriented sectors in Europe. So kind of the combination of all of those, it's no wonder why we are seeing European equities, notably the Stoxx 600, on its extending its potential 8th consecutive day of gains. That's the longest streak since 1999.
Yes, and that maybe send us all out to party, socially distanced, of course. Let me ask you about the US data then. We've got PPI numbers coming out later and some other data, I think, from the US.
Yes, we have U.S. retail sales today, which typically would be, potentially market moving. But I think at this point, it's just adding noise to the narrative. I think at this point, Fed members have made up their mind about how tomorrow's outcome is likely to happen. And so I do think at this point, the Fed is unlikely to really see that substantial further progress needed to officially signal any kind of tapering timeline tomorrow or have a material change in their language. But I would expect some potential hawkish tilts tomorrow, notably around that dot plot. The bar is so low for that 2023 to now show a hike. And so I really think the outcome tomorrow is what markets are going to be focused on and less so about that potentially noisy data today.
Laura, thanks very much. Laura Cooper, Bloomberg Markets Live macro strategist. Thanks very much for coming to talk to us here on the European Market Open. European equity markets then pointing to the upside or moving to the upside this morning. Chemicals doing pretty well still. That is one of the best gaining sectors this morning. To the downside, though, the banking sector losing ground. HSBC down by 1.5%. Hard for London to make as much ground as the others with that the case. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may
be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
I'm confident that we will not need more than 4 weeks, and we won't need to go beyond July the 19th.
I think crypto is the next internet-sized opportunity for the United States.
Russia that is not acting in a way that is consistent with what we had hoped.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 15th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. War and peace. NATO warns about China's rising military ambitions as the U.S. and the EU end their 17-year dispute over aircraft subsidies ahead of today's summit in Brussels. End of the COVID boom, Jamie Dimon signals a trading revenue drop of more than a third after last year's record numbers. Meanwhile, Goldman Sachs leads the return to office race on Wall Street. And the UK ends the COVID restrictions for 4 weeks in England. This as both AstraZeneca and Pfizer vaccines are shown to be more than 90% effective at preventing hospitalizations from the Delta variant. So good morning, everyone. China's rising military ambitions present NATO with challenges that must be addressed. That's according to the alliance, marking a shift in its stance that could kindle confrontation with Beijing. The Secretary General Jens Stoltenberg heralded the speed at which the group stepped up the meeting the threats.
We are concerned by China's coercive policies, which stand in contrast to the fundamental values enshrined in the Washington Treaty. China is rapidly expanding its nuclear arsenal with more warheads and a larger number of sophisticated delivery systems.
Well, China has responded to NATO's communique. Through a statement by its mission to the European Union, Beijing says it doesn't pose systemic challenges to any nation, but it would not sit back if any country poses such challenges to China. Well, joining us now with more is Bloomberg's International Government Executive Editor, Ros Matheson. Ros, thank you so much for always making the time to come on, because I know you have a very busy day. But has the alliance now been reinvigorated?
Well, you can see the shift in NATO, at least from the Donald Trump presidency, when, of course, Trump frequently questioned NATO and particularly the commitments other countries were making to. And, of course, the French president famously called NATO nearly brain dead only several years ago. So the tone at the summit this week has been markedly different, one of presenting a united front as much as possible, talking about common threats, not just China, of course, but also the big one in Europe's own backyard, which is Russia, and talking about working more collaboratively to confront those challenges, and of course also trying to paper over some tensions that NATO has had in recent years with one of its key members, which is Turkey. So you can see, at least on the surface of it, an effort to say we're working on these issues together. Of course, the reality is that the way that they may see themselves needing to manage those relationships is quite different still.
Roz, ahead of the US-EU summit, we're also reporting that the two sides are set to end the 17-year Boeing-Airbus dispute. What do we actually know about it?
Well, that's right. This was something that's been flagged for a couple of weeks now. We could see movement towards a resolution and a real desire to put this thing to bed. Of course, it was affecting about $12 billion worth of tariffs and really hitting both countries, arguably, and both companies, arguably, quite hard. And again, a recognition that that doing so would arguably weaken both Airbus and Boeing at a time when you've got Chinese aerospace companies really pushing outwards and expanding their influence into other parts of the world. And is this the time to be having your own sort of big marquee state companies in trouble? So there was a recognition there that they really needed to put this dispute aside. And as part of that, again, that sense of you want to cooperate with China on certain things, but you really need to compete with them economically. So it looks like they've decided to reach a resolution on that one. It should be announced later today.
So what else do we know? You know, on the Biden agenda, basically visiting Europe, he has a pretty packed agenda. Tomorrow he's also meeting in Geneva Vladimir Putin. What do you think, Roz, will be his toughest day?
Well, the biggest thing, of course, in all of this probably has to be his sit-down tomorrow in Geneva with the Russian President, Vladimir Putin. There's a lot riding on that for him, less so for the Russian leader, because really he gets the win just by having Biden show up and shake his hand, and the recognition that he's looking for. For Biden, there's opportunity in meeting the Russian president, but also a fair amount of risk. He has to come away potentially with some sort of tangible to show for it, and also the sense that he is standing up to Vladimir Putin over various issues that the US is concerned about, including ransomware attacks. So there's quite a lot of pressure on him to show something from this, more than we've just agreed to sort of diffuse tensions in the short term, perhaps some gestures on either side. But he has to balance the way that he's perceived at the end of that meeting. So that's probably the biggest thing on his plate for this whole swing through summits in Europe.
Roz, thank you so much. Bloomberg's executive editor there for international government, Roz Matheson. Now, England's Freedom Day has been delayed. As expected, Boris Johnson yesterday announced he was pushing back lifting virus curbs by a month. That's amid concern over a rapid rise in COVID cases as the highly contagious Delta variant spreads. Meanwhile, data out this morning also shows that UK payrolls surged the most on record in May. Now, companies stepped up hiring as coronavirus lockdown rules were being eased. While Bloomberg's UK economy reporter Lizzie Burden now joins us. Lizzie, good morning to you. So what did the UK jobs data show actually this morning?
Well, the UK added jobs for a sixth month and vacancies climbed 16%. In May, remember, this is the month when restaurants and cinemas reopened, so that's explaining the surge in demand for jobs in May. It could be a different story in June, though, because of this delay to the reopening.
Lizzie, this extension is as devastating for certain sectors, but what does it mean for the economy in general?
As you say, it'll be a blow to certain sectors, mainly because of the continuation of social distancing rules, which will severely curtail earnings, especially in hospitality. This is meant to be the peak season for that industry. But despite the postponement of easing, the government isn't planning to extend support for businesses. The furlough scheme, for example, still will be tapered as planned. And that's despite the warnings of hospitality bosses that hundreds of thousands of jobs could be lost in that sector. And so the government could be allowing this because of the labour shortages in various sectors. It could be allowing people to move around the economy, but also it's going to save on the ballooning cost of furlough. It'll be really bad for hospitality, arts, entertainment, travel. But away from those sectors, economists have been expecting a 2 to 4 week delay. The mobility and confidence in the economy is recovering despite the restrictions. So overall, it might not actually be that big of an economic hit.
Thank you so much, our UK economy reporter there, Lizzie Burden. Now, we're also just getting some breaking news in terms of a free trade, if I could get my words out. Happy Tuesday, everyone. The UK is saying that there's a free trade deal agreed with Australia that, for example, this deal will boost car, whiskey and confectionery industries, and it also eliminates some of the tariffs that we've seen on Australian wine being imported into the UK. So we'll watch for that, and of course, it will benefit specific industries as well. Coming up, inflation has been on everybody's lips as economic stimulus wrestles with tight supply lines. Opinions remain divergent, and millions of missing jobs can also make inflation hawks think twice. So we'll have the details on that next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the future of inflation is being hotly debated as economies continue down the path of reopening. As the argument rages on, the Fed begins its two-day meeting with the subject on everyone's minds. Well, joining us now is Geraldine Sundstrom, Portfolio Manager at PIMCO, focusing on asset allocation strategies. Geraldine, as always, thank you so much for coming on. When you look at inflation, and this is really anyone really talks about in the markets, it's unclear if we do see stronger inflation and if the Fed is wrong, when we would see it. So first of all, Geraldine, do you believe, like the market now seems to, that actually any spike in inflation is temporary?
Well, anyway, for base effect reason, there would be a time when inflation will go lower. The uncertainty around forecast at the moment is particularly elevated. We are going through something that's really unprecedented. It's likely that inflation will remain elevated for a few more months, but after that, we definitely see things, coming down. All the more than looking into 2022, the fiscal stimulus, the monetary stimulus is going to be withdrawn around the world. So economies should slow down pretty much, even though we still see them growing above trend. So ultimately, inflation should get back into a reasonable level after a couple of quarters, most likely.
So when you look at, the possible overheating economy, do you worry about the U.S., Geraldine, but is it a worry that we should think about in Europe, or is Europe just completely different?
Excess saving capex plans are pretty strong, I would say, in a quite generalized manner. Of course, in the U.S., maybe the fiscal stimulus has been stronger. Excess saving are particularly strong as well. So if there were to be a place, the U.S. would certainly be ahead of Europe in terms of risk. Yes.
Geraldine, overall, what's your biggest concern when it comes to asset allocation? So is there something apart from inflation that we could be misreading?
Of course, markets have moved, have really embraced the recovery. We know that taper is going to come at some point. It's well telegraphed. It would seem that the situation in many ways is very different from 2013. But there will, of course, always be a bit of nerves around. We don't think it will derail anything from a fundamental standpoint. It's much more, markets with a volatile tendency because, the injection of liquidity will start to slow down. But we think it's going to be well telegraphed. It's going to be very gradual. And with growth being good, with pent-up demand being good, risk assets should do fine.
Is there value in emerging markets, or how do you split it, Geraldine? Where do you choose to put your money right now?
So in terms of equities, we're looking at it much more from a sectoral standpoint and making a difference between what is sustainable and what is a one-off. And certainly there are some sectors which are going to be secularly supported, that have pricing power, that have barriers to entry, where we still find good value in terms of semiconductors, forest, AI, automation. There's a number of sectors, even maritime transport for that matter. So we're looking at this in this way. There are other areas which, of course, are much more one-off, that are going to be more ephemeral, and where we choose not to be so present. In terms of fixed income, I would say in credit, we like still the reopening trade. There's still some room to go, but we are tending to be much more into the securitized part of the market, because credit spreads, generic credit spreads, are becoming quite rich.
Geraldine, in terms of equities, does technology at the moment look expensive, or are there parts of the market where you could still see prices rising?
I would differentiate the hardware from the software. So when we look at hardware, I would say this is our favorite part of the market in terms of semiconductor equipment, machine vision, automation, and this part of the tech we feel is highly attractive. The software internet part, we're a bit more cautious because it doesn't really go necessarily well with the reopening trade, but also regulation is becoming harsher from China to the United States via Europe. So we distinguish between the hardware and the software, and in the hardware we certainly see quite attractive valuation. In fact, is all the more than the pricing power pendulum seems to have moved from the software to the hardware manufacturers given scarcity.
Geraldine, on the back of what we heard at NATO and the fact that actually, they were talking about the Chinese military, that China responded through their envoy saying that they are watching this very closely. Are the supply chains, because of the Trump era, now moved and so, can't move more? Or could that be a disruption that could also hit some of the industries that you're looking at?
So there will be disruption for sure in strategic areas, I would say mostly in the technology as well as probably in the pharmaceutical industry, which we think a bit about less. However, you have to look at this probably as an opportunity in the sense that for this strategic sector, be it in China or the United States or Europe, they are trying to create very welcoming and very supportive environment in terms of subsidies, in terms of taxation regime. And this means more investment than anything else equal. And that's why we like the semiconductor equipment makers, because we will, countries and region want to reshore production away from Asia or even Taiwan for that matter because of tensions with China, back into the United States, back into Europe. So everything else equal, this means more investment and a more friendly environment from the part of government. So this should be seen as an opportunity in that case.
Geraldine, thank you so much. Geraldine Sundstrom, their PIMCO portfolio manager. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Here in England, the coronavirus lockdown will last at least another 4 weeks. Prime Minister Boris Johnson has pushed back his plan to lift restrictions until at least July the 19th. A more infectious variant has spread rapidly across the country. It threatens to undermine efforts to vaccinate the country's way out of the pandemic. Once again, there is concern that there could be blackouts in the two most populous U.S. states. Heat waves in Texas and California are threatening to push electrical grids to the brink. Texans are being asked to conserve power because a number of generating plants are currently offline for repairs. California's grid has been swamped with demand due to temperatures expected to hit over 110 degrees Fahrenheit in the next few days. And China is warning NATO it will not sit back in the face of any challenges. Beijing also said that the alliance should not exaggerate Chinese military power. The statement illustrates the potential for tensions to escalate. The US is trying to convince its allies to take a tougher approach to China. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, stocks in the green again after the Nasdaq closed last night at an all-time high. More on the markets next with our Danny Berger. This is Bloomberg.
valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
I do think we're going to have higher inflation, but I don't think it's going to run away the way some people do. And to that end, I think bond yields will move higher, but not to unattractive levels.
Well, that's KKR's head of global macro and asset allocation, Henry McVeigh, on inflation risks. Now let's get straight to the markets with our very own Danny Berger. Hi, Danny. Tomorrow's FOMC meeting, the big event of the week, but we also have retail sales and PPI out today. What does the setup actually look like for the markets?
I have to say, Francine, I feel like the market's sort of sending the same message as KKR there. That is that it's looking through what's expected to be a spike in inflation in today's PPI numbers. You can see really those concerns aren't there when you look at what equities are doing. We have this stark outperformance of growth stocks. So you have the NASDAQ 100 yesterday hitting all-time highs while Russell 2000 shares fell. You can still see that outperformance in today's future prices as well. Yields perhaps more so pricing in more moderate growth relatively, so a bit of a disconnect there. But really, I think that retail sales figure is going to be interesting because while market participants might be saying we're not worried about inflation, a question that arises is whether the consumer is. And this is something that Sebastian Gailey from Nordea flags as a potential risk. If retail sales come in really weak, if volumes are low but prices are high, it shows that the consumer has issues with those high prices. And that in turn might cause the Fed, might cause the Treasury Department to reassess their view on the economy. So again, I do think that retail sales figure will be really interesting today, despite the fact most people are really looking forward to tomorrow's FOMC, Francine.
Yeah, Danny, there were a couple of things in the Chinese market. I mean, I think they had concern about liquidity, so I don't know if you think, that's something that we need to watch out for here in Europe as well. And then metals were down.
Yeah, that's right. And I also think that metals partially about that China story and concerns about liquidity and demand, but also about that inflation fear receding. So we're not seeing metals priced as high as they were.
Danny, thanks so much. Our Danny Berger there with the full roundup, of course, of what we're watching today in the markets. And then Danny's back also for a full roundup of what we could see amongst bank earnings. Now let's take a look at some of the other things that we're watching out for today. At 10 a.m. UK time, we'll have Euro area trade balance figures. At 1:15 p.m., the Bank of England Governor Andrew Bailey due to speak at the Citi UK annual conference. And then this afternoon, we'll have data from the U.S., including PPI and retail sales. Of course, keep an eye on the EU-US summit in Brussels with President Joe Biden attending. Plus, the UK Prime Minister Boris Johnson will also hold a bilateral meeting with his Australian counterpart, Scott Morrison. I think we had breaking news in the last couple of minutes that actually they came to a trade agreement. And then Oracle Corporation is expected to report earnings for the first fiscal quarter. Coming up, resolution. After a 17-year dispute, the U.S. and the EU agreed to end their dispute over aircraft subsidies. We'll bring you the details next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
War and Peace, NATO warns about China's rising military ambitions as the US and EU end their 17-year dispute over aircraft subsidies ahead of today's summit in Brussels. End of the COVID boom, Jamie Dimon signals a trading revenue drop of more than a third after last year's record numbers. Meanwhile, Goldman Sachs leads the return to the office race on Wall Street. And the UK extends COVID restrictions for 4 weeks in England. This as both AstraZeneca and Pfizer vaccines are shown to be more than 90% effective at preventing hospitalizations from the Delta variant. Well, good morning, everyone. I'm Francine Lacqua in London. Welcome to Bloomberg Surveillance Early Edition on Tuesday, the 15th of June. Now, China's rising military ambitions present NATO with challenges that must be addressed. That's according to the alliance, marking a shift in its stance that could kindle a confrontation with Beijing. Secretary General Jens Stoltenberg heralded the speed at which the group stepped up to meet up threats.
We are concerned by China's coercive policies, which stand in contrast to the fundamental values enshrined in the Washington Treaty. China is rapidly expanding its nuclear arsenal with more warheads and a larger number of sophisticated delivery systems.
Well, China has responded to NATO's communique. Through a statement by its mission to the European Union, Beijing says it doesn't pose systematic or systemic challenges to any nations, but it would not sit back if any country poses such challenges to China. Well, joining us now from our Brussels bureau is our correspondent, Maria Tadeo. Maria, great to have you on the program. What actually came out of NATO yesterday?
Well, Francine, first of all, there was a very clear pledge that NATO is still a very relevant institution, that this is an alliance that sees a future. And when you speak to the American delegation, that is something that they wanted to really present and cement this idea that the U.S. will always honor what they now call their sacred duty to protect NATO and Article 5. When you look at the Europeans, it was still very much the same line, to say we want to work together and we want to protect our allies. Of course, we know that on paper, there's still differences when you look at what the Germans believe, when you look at the French, when you look at President Erdogan, also of Turkey yesterday. But overall, it was very much a session designed to send a message to both China and Russia, saying NATO is still very united. On China, as you said right there, they were very explicit. The Chinese, they're an economic power, but they could also turn into a military power that could be a threat to the global order. And when you look at the communique, Russia was mentioned many times as a country that is aggressive to its eastern neighbors, that could pose a threat to countries like Ukraine, Moldova, but also Poland and Lithuania.
We will not be divided. And that, I think, happened too many times over the last months, was that the United States and Europe were basically split apart. Right. That, I think, is not going to happen that easily anymore.
And that's what's Francine, the Belgian Prime Minister, as I said, the Europeans repeat in this line that we're staying together and we're not going to be divided, especially when you look at the Eastern European neighbors who do feel that the situation when it comes to Russia has really escalated over the past year, especially as troops have been moving into the east.
Maria, thanks so much. Maria Tadeo there from Brussels with the very latest, of course, on what's been happening in NATO. Now, joining us to discuss this more in depth is Anthony Gardner. He's former U.S. ambassador to the EU. Ambassadore, thanks so much. I know you speak like a million languages, which always really impresses me. I think that's what you have to do when you're an international man of mystery. When you see the President Biden's agenda and what exactly he's here to do in Europe, what will be his most difficult day? He went from the G7 to NATO to this EU summit, US-EU summit, and then to meeting Vladimir Putin tomorrow.
Well, the most difficult day will be meeting Vladimir Putin, clearly. But these trips are very important because they are of symbolic significance, given what happened in the last 4 years during Donald Trump, particularly with regards to the EU, because the prior administration thought the EU was essentially a waste and not effective. This administration considers, in my view, appropriately, the EU is actually a critical partner. So that summit is going to be very important. I welcome the fact there's going to be a Boeing-Airbus agreement. I haven't seen the text yet. There are going to be some interesting discussions in there about what kind of subsidies are going to be covered going forward. And there's going to be some difficult conversations as well about what about those aluminum and steel tariffs. And that's a difficult domestic political issue for the president, but I think there is a way forward on that topic as well. But clearly, the discussion with Putin is going to be very direct. I suspect there's a lot of unfinished business, Francine, the last administration. So I believe that Biden will say, look, this time, unlike the last 4 years, I stand shoulder to shoulder with an alliance, and we will respond seriously.
Ambassador, when you look at some of the, what the U.S. actually needs the EU for, is it to deal with China and Russia, or is it just to try and go back to an older, normal world order?
Will rely or hope to work with the EU on many areas, but China clearly is the acid test. Now, some in the EU and member states don't want to hear that message. They keep on saying, yes, of course, we're going to work with you on China, but we see China a different way. The fact of the matter is, politically, it is the acid test. That's the way Congress looks at it. Many U.S. voters will look at it. What good are allies, including the EU, if they're not going to work with us on the key challenge going forward? The EU likes to say we want to work within the rules. Of course, we want to work within the rules, too, in institutions like the WTO. But rules are just not going to be enough, Francine. It's going to have to also mean sending China some very clear messages. We saw that coming out of NATO. I hope we see it coming out of the EU as well. The U.S. and the Trade and Tech Council will be very much part of that. The supply chains will be part of that discussion as well, reducing our reliance on China. And also, how do we get significant WTO reform?
Does China retaliate? So what's the best way to actually deal with China?
Well, one of the best ways is actually finally working with our allies, and this is what this is all about. In the old days, under Trump, it was bilateral, transactional, one-on-one with China, because the EU thought that the EU was a distraction. But if we work with our allies, particularly the EU, and let's remember, the EU is a trading and regulatory superpower in those two areas, it's much more effective to go to China and say, this is what we're going to do. We're going to bring more cases against you, but we're not just. We're actually going to close our markets to you if you don't open up your markets and open up your investment practices. So it's a much more effective way of proceeding, and I think the Chinese understand it very well. Remember, they've been looking for years at ways of dividing Europe internally and dividing Europe from the United States.
Ambassador, what does Russia actually need from the U.S. tomorrow?
What do they need? Well, I think they're getting what they want, which is a recognition that Russia's a player, that the United States takes Russia seriously, and hence this meeting, the summit. And clearly, they're a player in some parts of the world, and we can cooperate with them on some areas of important issues like climate change and so forth, and also the Iran agreement. So they're getting what they want, but I think the message will be, no more election interference. You have to control these bodies that are operating in Russia, sometimes with state approval, and sometimes, the state is looking the other way. Bodies that are, putting out a lot of disinformation that's repeated in our media. So there's going to be some strong discussion about that.
But does Vladimir Putin, what's the incentive for Vladimir Putin to kind of, heed the warnings and maybe temper what's been happening over the last 4 to 5 years?
Well, to date, we've done rather modest things in response to Russia's aggressive behaviors. I mean, expelling a few diplomats, of course, means nothing. But if we can work with our allies in tightening the sanctions we have in place on Russia and doing things which are asymmetric, releasing information to the social media about exactly what the Kremlin is doing with its cronies, it's the kleptocratic nature of the regime, embarrass Putin if necessary, or engage in cyber activities to send a message that we too can play this game. That will send a very strong message. So no more business as usual of these modest half measures. And we should even consider sectoral sanctions if the EU is ready to go along. That's always a big problem. Under my time as ambassador to the EU, it was very difficult, even after the invasion of Ukraine, to get all of the EU member states to act. But we finally did. Remember, we finally did, late but quite effectively.
Anthony Gardner, thank you so much for joining us today, former U.S. ambassador there to the EU. Now, coming up, there's good news on the vaccine front. Those who have had 2 doses of either Pfizer or AstraZeneca shots appear to be well protected against the Delta variant. We'll look at what's happening exactly in the UK. We'll look at variants and vaccinations. Next, this is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics, and of course the virus. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this hour we've had confirmation, first of all, that the UK-Australia free trade deal is happening. This is the first major bilateral trade deal that the UK has brokered since it left the European Union in January 2020. Downing Street says the deal with Australia will boost its bid for the CPTPP. Really rolls off the tongue as it seeks to strengthen trans-Pacific relations post-Brexit. Now, we'll have plenty more, of course, on that. We'll look at currency moves, but let's get straight to the Bloomberg Business Flash. Here's Leanne Gehrens. Hi, Leanne.
Hi, Francine. Emirates has slumped to a record $6 billion loss in the financial year to March as the pandemic disrupted travel. The state-owned airline received a capital injection of $3.1 billion from its owner, the government of Dubai. As a result, Emirates has been hit especially hard with the border closures related to the coronavirus pandemic. Now, Dan Loeb's hedge fund, Third Point, is said to have built a substantial position in Vivendi and is examining the French company's plan to sell a 10% stake in Universal Music to Bill Ackman's Blank Check company. Several of Vivendi's minority shareholders have really voiced opposition to this deal, but sources say Third Point has not given its opinion on the transaction just yet. Vivendi's spin-off of Universal Music goes to a shareholder vote on the 22nd of June. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, AstraZeneca's antibody cocktail has failed to prevent COVID-19 in a recent study. It was found to be only 33% effective at preventing COVID-19 symptoms in people who had been exposed to the virus. Now, the trial, named Storm Chaser, is one of the 6 advanced stage studies AstraZeneca is running to test the medicine. Meanwhile, there was some good news on the vaccine front. Now, according to health authorities in England, shots from Pfizer and AstraZeneca are highly effective at preventing hospitalization of those infected with the Delta variant after 2 shots. Now, the Pfizer shot is 96% effective against hospitalization after 2 doses, while the AstraZeneca shot is 92% effective. The results are comparable with the protection offered against the Alpha variant, which first emerged in the UK. Joining us now is Sam Fazeli, Senior Pharmaceuticals Analyst for Bloomberg Intelligence. Sam, great to have you on the program because I have 1,000,001 questions about exactly what we're living through. So first of all, it seems that the UK is being kind of stonewalled by the EU because we have genome sequencing, because the cases are rising. So first of all, is the situation much worse in the UK than it is in Europe? Or is it that just we measure things differently?
No, it definitely is worse than it is in Europe in terms of the resurgence of the cases, because we were doing fantastically well. This Delta variant is we're the second highest country after India in terms of the percentage of cases. So it is worse, and we know much more about it because we do a lot more sequencing.
But do other countries also measure if they have the Delta or the Alpha variant?
They do, but not at the same level.
Okay, so here, I mean, what, 90% of all cases are Delta variant?
We'll probably be 100 pretty soon.
And it's not, so it's not more deadly, it just spreads more quickly.
More deadly is tough to say, but we do know that it's got about twice the risk of hospitalization than the Alpha variant. That's been now shown 2 or 3 times.
And so, why is that? So it's not only that you catch it easier.
You catch it easier, and it's also possible that somehow the biology of the virus or the way that it interacts with your body gets the virus in more places, gets you sicker, evades your immune system better when it first gets in, so you get a much bigger infection. You need to go to hospital.
So Sam, yesterday we heard from officials here in the UK that we're looking at modeling, and the numbers really shocked me. They basically say that if we continue as it is, and if we open on the 21st of June, you'd have as many hospitalizations than we had back in 2020, like in April 2020, which was huge. It was over 3,000 a day. So is the only way, not opening further, but also even going back in lockdown?
Look, people will hate me for saying this, but I wish we'd stopped eating and drinking indoors in terms of restaurants and pubs. But you have to multiply a few things together. Twice as 50% more transmissible, twice as increased hospitalizations, so maybe you can multiply those 2, although they're related. And it evades your previous immunity, and it evades vaccines more than the Alpha variant in terms of infections. So there's no question, therefore, that you just get a rampant rise, and exponential things are really awful to deal with.
But so what's the right strategy? So, apart from going back into some sort of lockdown, if I'm vaccinated 2 times, will I avoid the hospital?
But the data's saying you will, to the percentage, to the fact that there are still a few percentage of people who will be hospitalized. But that's what the data says. But Francine, our life is not driven by hospitalizations today, which is why I think that phrase started coming out. We have to learn to live with this. If you notice that phrase, well, probably the first time that I really heard it, I heard it anyway. That's the problem. We're counting cases. We run our lives by cases. We open and close by cases. We travel. You can't travel if you test positive. It's not saying if you're really sick. That's the problem we're dealing with now.
But I still don't understand. So you have vaccine passports in Europe where if I'm double vaccinated in France, I can go to Italy, Germany, and Portugal, no problem. But it's not the same with the UK. Will that ever change? Is it politics, or actually do the numbers make sense when you look at?
Yeah, I don't think it's politics. If you're a country that's half the way that the UK is in terms of numbers of double vaccinations, and you have the risk of having the Delta variant, why would you want that to start flying about when you've got to give yourself time to get to that 2 doses.
Okay, so why is the Delta variant stronger here in the UK? And actually, does the 12-week, which was a strategy of the UK, you give the first dose so that you touch as many people as you can, and then wait 12 weeks, was that wrong?
Well, with hindsight, yes. But at the time, I was worried about exactly this. Then the data came through. It was looking fantastic. We cut hospitalizations and death. And now we have a variant. This is what we were worried about. Either the 1 dose on its own causes the variant to evolve, or something comes along that evades it, which is what we ended up with.
All right, Sam, thank you so much. As always, Sam Fazeli there, our senior pharmaceuticals analyst for Bloomberg Intelligence. Now, for more on the Delta variant, make also sure you catch our Q&A with Sam later today. I'll be following and also probably asking, the last 990 questions I didn't get to. That's at 3 p.m. London time today on T Live on the Bloomberg terminal. So if you have a Bloomberg terminal, you just type T Live and you can follow Sam's great Q&A. Coming up, back to the office, Goldman Sachs leads the pack when it comes to getting staff back behind their desks. But is it really a competition? We'll have plenty more on that. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've...
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, while European bankers are seeing a slow return to the office, U.S. banks are putting pressure on staff to get back to their desk. This week, Goldman Sachs is beginning its return to the office in earnest. The bank has also set a deadline last week for employees to report their vaccination results. Well, Bloomberg, or vaccination status, I should say. Bloomberg's Sonali Basak reports from Goldman's New York City headquarters.
Goldman Sachs is bringing thousands of its employees back to its offices across the United States, with some exception. However, for most employees, it will be back to a 5-day office work week. Thousands of interns will start for the first time in offices as well, while vaccinated employees across the country will no longer need to wear a mask. Those without vaccinations will still need to be wearing a mask at all times except for their desks. European offices will be close behind. Goldman Sachs expects to open offices in Europe as early as next week. Sonali Basak, Bloomberg News in New York.
Now let's get more with our Danny Berger. Danny, how do other banks actually compare to Goldman's when it comes to the return to work?
Well, there's definitely a divide when you look at UK European banks versus Goldman. Sonali there had mentioned that Goldman's going to start looking at opening some of their European offices. JP Morgan, Goldman certainly looking at phasing in a return when it comes to Canary Wharf. But if you go to these places, they're largely empty at the moment, Francine. You have Barclays, for example, still talking about a phased return. No one's going to be mandated to come back in. HSBC is still looking at more of a hybrid model, giving up some of their office space. So yes, it really comes down to these cultural differences between the big US lenders and those in Europe. So we're unlikely to see any sort of even policy. We're unlikely to, here in Europe, to see something like Goldman Sachs, where I'm kind of jealous of Sonali yesterday, even though she was out there in the rain. I mean, it was like a festival. They had free food. They had live music. Francine, I'm still have yet to hear, though, whether or not Goldman Sachs played the latest hit from David Solomon, aka DJ Soul, who just released a single right before the offices reopened.
I know, I love that. First, I mean, the two things that shot. First of all, I love that song. I know our producer George doesn't, and I know Danny, you like it as well. So we have the same music taste. And then people are coming in at 8:30, which for news, for a news organization, I was like, that's quite late.
Yeah, it definitely is.
Danny, JP Morgan's Jamie Dimon is also warning of a steep decline to revenue after the pandemic boom. Have a listen.
Last quarter is exceptional. This quarter is what I call more normal, where you can plug in your model and make it really simple. It's like something a little bit north of $6 billion, which is still pretty good, by the way, and probably better than we told you last time. Because last time we said more like 2019. I forget what that number was, but plug in a number a little bit north of 6.
So does this warning, Danny, actually come as a surprise to Wall Street watchers?
Well, we did see shares decline about 2% for JP Morgan. Other banking shares fell as well. So, it did cause a readjustment in markets. Perhaps not a full-out surprise, considering that banking executives had been warning about this really since the peak of earnings when it comes to trading revenue because of this pandemic boom. And Jamie Dimon himself went on to say that, look, it's not necessarily that the figures are going to be bad, but it's more of a return to normal. But still, we're in a situation where investors and traders are having to adjust. This is the first time they're really getting concrete numbers from JP Morgan of what the revenue is going to look like. So they're putting those into their models, and that in turn is causing a fall in these share prices because what he said was worse than what was expected, Francine.
Danny, thanks so much. Our Danny Berger there with the very latest on the banks. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin, Katie Lyons out of New York. This is Bloomberg.
Announcing a project and doing a project is something different. And that's why we are so proud. We have started now the first one here. It's running, and I believe that we will see scalability. have now a base to show use cases, so we can develop new cases on how to build a hydrogen economy.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now.
China's growing influence and international policies presents challenges to alliance security.
When it comes to China, you've got to... I don't think anybody around the table today wants to descend into a new Cold War with China.
We are open for dialogue with China. We are open for business with China, but on elements of reciprocity.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m., 5 a.m. in New York and 5 p.m. in Hong Kong, and our top stories today. Tough talk from China. Beijing warns it. A truce on tariffs. The EU and the US have agreed to settle the long-running trade dispute over Boeing and Airbus that has led to billions in duties on imports. And keep your distance. Boris Johnson's plan to lift social distancing rules in the UK have been delayed for a month because of that more infectious variant of the coronavirus. Now, of course, there's lots going on. We're also looking at data in the U.S. a little bit later on that will give markets a little bit of impetus. Kaylee, yesterday we already, again, saw record highs.
Record highs seem to be the new name of the game, Francine. We are awaiting that data, PPI in retail sales at 8:30 a.m. Eastern time. And of course, the all-important Fed decision tomorrow. Where that left us in the Asian session was a bit mixed. We did have stocks opening up from holidays yesterday, including in China, where actually we fell by about 1%. The Nikkei, though, was a bit higher. What was really going on in China is liquidity concerns. The PBOC deciding to roll over medium-term loans that were due to mature today. That not adding cash back into the system, thus you're a bit concerned about liquidity at this point. Another story to follow in China is actually the demand for copper. If you look at the Yangsheng copper premium, which essentially gauges China's demand for imports, it's fell to the lowest since 2017. That is dragging on some of the industrial metals today. I also wanted to point out the Australian dollar, the big underperformer in the G10 space, weaker against the US dollar by about 0.3% on dovish minutes from the RBA. As for what the picture looks like here in the U.S., as Francine mentioned, we did close at record highs yesterday, and we look set for more records again this morning, at least judging from the futures market, with S&P 500 futures up about 7 points. In the Treasury market, we did see a pretty sizable move upward in yields yesterday. Today, though, we're climbing back down by just about a basis point. We're sitting at 1.
Spain is down. Germany is up. So, there are, if you look at the S&P, if you take a look at the broader equity index, there's not a lot of movement, but there is a lot if you look into the individual country benchmarks. So take a look at the DAX. It's the biggest gainer of the European equity index, is up 0.2% if you take a look at the IBEX, which is down dispersion there, it's the biggest loser among European equity indexes. German bunds are coming, well, bunds are up in price, down in yield, and this is obviously the important thing to watch because it's really a gauge of what an investor's ECB. I noticed yesterday Villeroy said they're going to keep on with the stimulus, and they'll keep it on at least as long as the Fed does in terms of support for the economy. He also said that the stability of the euro, the value of the euro, is the main job for the ECB. Finally, take a look at Airbus. We're going to be talking a lot about this today. The Boeing Airbus back and forth in terms of trade. The trade war seems to be coming to an end. So, Francine, we'll see how that finishes off, and many other tariffs may also drop away at this U.S.-EU summit.
Yeah, there's quite a lot going on, Matt, and I know you drew my attention actually to a wonderful story that's one of our most top read on the Bloomberg terminal about Deutsche Bank. Now, we often hear about traders going rogue or, big whales losing money, and this one is a story about Deutsche Bank making $1 billion because of a trade on freight. It's fascinating.
And a kid. He's a kid. You see the trader's like only 35 years old, and he's made $1 billion trade for, I guess these big ideas have to come from the kids, don't they?
I wouldn't write anyone off. I don't know if it's an age thing or it's just a brilliance thing. We'll have a discussion about it throughout the program. Now, look at what's ahead today. Matt, Bank of England Governor Andrew Bailey speaks at the Citi UK Annual Conference at 8:30 a.m. New York time. We'll get U.S. industrial production, PPI, and retail sales for May. That's what Kayleigh was talking about. UK Prime Minister Boris Johnson also holding a bilateral meeting with the Australian Prime Minister Scott Morrison. Finally, they agreed on a trade deal. And then the EU-US summit is actually being held in Brussels. Now, President Biden also wrapping up his first NATO meeting with a range of geopolitical tensions on the allies' agenda from China to Russia. The Belgian Prime Minister Alexander De Croo spoke exclusively to our Maria today on the sidelines of the summit about resetting transatlantic ties.
We will not be divided. And that, I think, happened too many times over the last months, was that the United States and Europe were basically split apart. Right. That, I think, is not going to happen that easily anymore.
Well, Maria Tadeo joins us now from Brussels with the very latest. Maria, very positive noise there from the Belgian PM. So is the NATO alliance now reinvigorated?
Well, Francine, they will tell you it has been, and that was really the message that we heard from pretty much every delegation yesterday, in which they insisted we're now working together. This is a very strong bond. We're all committed to the alliance. When you spoke to the U.S. delegation and what we did yesterday, they also said the same thing. For us, this is a sacred obligation. We're aware that the United States does have this obligation, in particular with some of the Eastern European countries who yesterday expressed their concerns when it comes to Russia. We have seen the Russian military being deployed very close to the eastern border, especially to the Ukrainian border with China, very much aligned on that front. They said this could be problematic and it could be also a military threat in the future. The one area, however, where we did see some differences of opinion was how to deal with China. President Biden, of course, taking a much more aggressive tone on that. Angela Merkel, however, said we don't want to be against a country. We want to be able to bring something to the table to counter that, but we should not just be against something. We need to be for something.
Yeah, the communique released after the meeting mentioned China 10 times. In 2019, it was only mentioned once. Of course, attention now is turning to the EU-US summit today. Maria, what's going to be on the agenda?
Well, look, this is a working lunch. We understand it's just going to be a 2-hour meeting, and then after that, President Biden is going to head to Geneva. What is interesting, though, is that ahead of this summit, the head of the European Commission, Ursula von der Leyen, he will be meeting with her, just did a press conference, and she said, and this line is very striking on China, that Europe wants to diversify imports away from producers in China. We want to care about sustainability, less environment damage, more transparency on labor conditions. This is the European Commission taking a much tougher tone on China when it comes to commercial relations and perhaps aligning itself closer to the U.S. position on that front. I have to say this is the toughest language I've ever heard from Ursula von der Leyen on the commercial relationship with China.
What's the story with Boeing and Airbus? So they've reached a deal in an attempt to end the trade dispute. It looks like they're going to extend aircraft tariff suspensions by 5 years. So it's not completely ended, but they're trying to do something about it.
Yeah, look, it's not completely ended, and to some extent, Matt, it really makes sense that this is happening today, this 5-year truce for 5 years. There will be a limitation into the amount of state aid that could go into those two companies. We know that to the extent that there are still tensions emerging as to whether or not this leads to unfair competition is still very much on the table. But today, of course, they want to leave on good terms. They want to be able to announce something, and this is what they're doing, to say we're going to remove those tariffs from European products, from American products, and a truce. Now, the problem is not going away, but it does signal that there is a declaration of intentions here that during the Biden administration, there won't be tariffs kicking into European products, and that is something.
Maria, thanks so much. Bloomberg's Maria Today, they're reporting.
Signs that there are seeds of this that keep changing. Spain a bit higher, certainly in the United States getting up to 10% potentially. So they have to watch out.
Sam, I thought Aduhelm was not a good name. Not a great name, at least. The marketing team could have done better. Meanwhile, AstraZeneca has a treatment called Storm Chaser, and that is an awesome name. But what's the deal? Did it miss its goals in a trial?
Yeah, it's the first time they were trying it in a proper setup. It's an antibody that is aimed at, and I don't think it's finished yet, preventing infection if you've been in contact with somebody and you've had a vaccine. So although it missed the endpoint of the trial, and the Regeneron antibody, for instance, cocktail, worked very well, there were telltale signs in the data when you look into it that actually if you give it long enough before, i.e. gives you a good protection, it can go up to 92% prevention.
All right, thank you so much to Sam Fazeli of Bloomberg Intelligence. Now I want to take a quick check on some stocks moving in pre-market trading here in the U.S. One of the big ones to the upside is actually a small cap company, Torchlight Energy, higher by 34% in early hours after declaring a special dividend. I would note as of yesterday's close, this stock up 411% year to date. Another stock moving to the upside is Novavax. It released pretty positive data from a study combining an influenza vaccine and a COVID-19 vaccine. It suggests that dual immunization actually may be a good strategy. That stock up about 2.6%. To the downside, though, one of the latest Reddit stocks, Petco, was mentioned on the Wall Street Bets Forum. It rallied 18% yesterday. Today, part of 4% before the bell, Francine.
Kaylee, we'll talk, of course, about the variants and what it means for the recovery with Trevor Greetham. He's up next. He's from Royal London, where he's asset management, head of multi-asset. And then a little bit later, Lori Heinl, State Street Global Advisors, Global Chief Investment Officer. We'll ask her maybe some of the Reddit names that Kaylee were also talking about. This is
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Kayleigh Lyons in New York and Francine Lacqua in London. Now, inflation has been the story for months, and the data points have been coming in hot for the past few weeks. But a couple of commodities have started to turn over. Bloomberg News has written a story about it. Corn to copper, lumber futures have absolutely crashed. And they also point out housing is one of those indicators that has turned over. That's what I'm looking at in my chart today. And for our listeners on London DAB digital radio, I'll walk you through this chart. Basically, consumers' plans to buy homes have jumped during the pandemic. We all know that. Everybody wants a better kitchen from which to work. But now they have dropped in the most recent survey. And some people are saying this is maybe a sign that the inflation in housing may be coming to an end. I think it could be that consumers are discouraged by the inflation they've seen in prices and a lack of inventory. Let's turn to Trevor Gratham to talk about this. He's head of multi-asset at Royal London Asset Management. And Trevor, you know, the reason I thought about this when we brought you on is that you are overweight commodities still, and you see inflation as a legitimate threat at this point.
Yes, I mean, we're overweight commodities in our multi-asset funds. We're underweight government bonds. We're pretty neutral equities. What we like about commodities is there's a big service sector-led recovery that we're expecting to see over the next 2 or 3 quarters in the developed world. Been pushed back a little bit in the UK, but it's pretty clear you are going to see service sectors get back closer to normal. And that really is going to drive a lot of extra travel spending, which is obviously energy commodities. And we're also going to see a lot of capital spending, particularly on the green agenda, which boosts things like copper and a whole load of the industrial metals. And I'm not surprised to see lumber weakening because mortgage rates are starting to edge higher in the US, and housing is a very long lead indicator. It responded very quickly to looser monetary policy. I'm not surprised to see housing start to roll over at the moment. But I think there's a big, tremendous Northern Hemisphere economic recovery yet to come. And while China is starting to tighten, it's not tightening with any kind of real feeling. So I think commodity prices have got quite a bit more to go. And therefore, inflation pressures, I think, will continue to build.
But Trevor, I mean, they'll continue to build to a point where it becomes uncomfortable with the Fed because the market seems to have repriced some of that expectations of tapering too quickly. So they seem to now believe the Fed that it's transitory.
Yeah. So I think it's possible that the bond market's got a bit ahead of themselves in terms of timing and positioning. We thought that the bond yields would rise coming into this period because we could see the very big year-on-year base effect that was going to boost the published inflation numbers, and we thought that would get people more worried about inflation. I think what the market's now doing is it's saying, well, those year-on-year comparisons are going to get slightly easier in the sense that inflation rates will probably come down over the next 2 or 3 months. And that will play into the Fed's narrative that this is transitory. But if you look at policy, you've still got a Fed that isn't talking about tapering. You've still got a government that's just spent $1.9 trillion US dollars and has got another couple of trillion coming down the pipe, which ultimately will be tax financed, but I think they'll be front loaded. And you've got the service sector recovery I've already mentioned. So I think this could be a monumental policy mistake looking back at it later, like the 1970s, where you have massively loose fiscal and monetary policy when the economy is going to recover if you do nothing to it at the moment.
So do you think we are potentially set up for a hawkish surprise from the Fed this week? And what reaction would you expect from the bond market? Because you say you're underweight government bonds, which has been a little bit of a pain trade recently. How mispriced are they, especially if that's coming on Wednesday?
I don't think the Fed will choose now to reset expectations massively. I think over the summer it's quite possible that yields will drift. But I think as the year progresses, it's going to be harder and harder to avoid talking about some form of tightening. And so I wouldn't be surprised to see the 10-year Treasury trading towards 2% later in the summer. But at the moment, I'm not expecting the Fed really to do very much to move the bond yield. They want the market to think it's transitory, partly because they want to really keep policy loose. And I can understand when I say policymakers don't want to take risks with COVID. You know, what we're seeing in the UK, I think we will see elsewhere. We will export the Delta variant to Europe and the US. And so this is a very bumpy situation, and policymakers don't want to be tightening too soon. But I do think it means that later in the year, you're going to, again, get people worried about tightening. And it's a very kind of two-way pull for stock markets, because when you've got the bond yield dropping and earnings numbers are still coming in strong, stock markets can make new highs and the tech sector can rally. But when you get that concern about tightening and bond yields go up, you'll get the stock market coming down again with the tech sector selling off. So I think you'll see a lot of two-way noise over the summer.
Trevor, thank you so much. Too short time, so we'll have to get you back on really soon. Trevor Greetham, their head of multi-asset at Royal London Asset Management. Now, tomorrow, stay with Bloomberg for a special coverage of the Fed decision and news conference. It all starts at 1:30 p.m. in New York, 6:30 p.m. in London.
ভালো করে চা দিন আর কি খাবেন আল্লাহু লা ইমাম চা খাবেন
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.